Hi, Chris Lamb with Commerce Home Mortgage. This is the market update for the month of November. I am filming this video on Friday the 30th, so we are going to get this video out before the election, but I want to just touch on the election and its potential impact on housing. You know, there's a lot of people out there that are wondering, is the election going to have some sort of an impact on housing? And certainly there will probably be some sort of impact, but there's a few things that I've been studying and hearing from some of the guys that I follow in as far as economists, as well as some of the hedge funders on Wall Street that put out certain blogs and publications. So if the current administration wins, we're probably going to see a very similar trend to what we have been seeing. Mortgage rates will most likely stay relatively low, but they will probably go slightly higher heading into next year. If Biden wins the election, we'll probably see rates stay low, potentially go lower. And Biden has made it very clear that he's going to give a first-time buyer tax credit to every American that buys a home, upwards of $16,000. So they're very pro-housing. If you remember back when President Obama was elected, they slashed the FHA mortgage insurance premium, and you know, they were really about trying to get every American in a home. So that's kind of the consensus, is that that's going to probably heat the housing market up even more than it is right now, if that's even possible. So what's important to remember for everyone, especially in California, especially in Northern California, is the housing market is on fire right now for two reasons. Number one is there is simply not enough homes for the people that need to buy them or rent them. There's more families that need housing than there are housing to supply them, and that problem isn't going away anytime soon without massive deregulation at the state level to make it more affordable for builders to build replacement homes, and that doesn't seem like that's going to happen anytime soon. Number two, we've got all-time low interest rates, so it's really fueling the housing market because people can buy a home today with a payment that's much lower than what it would have been this time last year, even though they're paying a higher price for that house. So unless those two things change, we're going to still have a very heated housing market next year, and we're not going to see that change just because one person or the other is elected. Now, obviously there's black swan events or something that could take place that changes everything, but unless that happens, that's probably what we're expecting right now. Now, just touching on mortgage rates quickly. As most people know, rates have been at all-time lows since the pandemic, really. They're still absolutely incredible. 30-year fixed mortgage rate hanging in the high twos, low threes, depending on credit, type of loan you're doing. 15 years, you know, with some loans is in the low twos. So, you know, going forward next year, we expect that to continue to be the trend. They could be slightly higher, slightly lower, but they're probably not going to change a whole lot. If there's any questions you guys have about any of this information, I do encourage you to call me here at the office, whether it's potentially refinancing, what it looks like to potentially sell and buy, or anything like that. I'm always available to you. And lastly, I just want to say thank you once again. We are just so honored by our past clients and our business partners who have referred us over the years, and this year has been no different. It's been a really great year. As I've said, we've been able to keep all our people employed and hire a few extra during the pandemic, and that's just because we're in such a great community. So thank you so much. Have a great November. Have a great Thanksgiving. I can't believe I'm already saying that, and we'll talk to you soon.